All right, cool. So I'm recording it now, guys. Everybody, can you all mute your line real quick, and then I'll go ahead and get started. All right, press chart, guys. So as you all see, like there's no indicators or anything like that on the chart, which is something that you try to want to trade towards to or get or lean more towards to is naked trading. Or using just a couple of moving averages and things like that, because what you want to really focus your attention to is price action. And what I mean by price action is like the patterns of the candlesticks and the candle bars. Like, what are they leaving? They're leaving clues, but deeper than the pattern, though, they're leaving clues at certain price levels. Okay. And this is trading in line with like the institutions, like the major central banks and things like that. So whenever you come to a fresh chart like this, what you want to do is come to the monthly chart. All right. On this chart, what you want to start with is, depending on the trend or what's going on in the market, you want to start with your most recent impulse leg. So, or your most recent trend. Here's the most recent trend from this high to this low. So what you're going to do is you're going to basically mark off, starting from this low all the way to this high, and you're going to make 3 zones. All right. Now, on average, you're going to do 1,000 pip range or a 10-cent range on the charts. Okay. On JPY pairs and like GBP odd, I believe, pairs that move like a significant heavy amount on day in day out on average, you're going to use a 2,000 pip range. So on this chart, you're going to use just a horizontal line, and you're just going to mark the lowest low or the highest high. Now, when you're marking these low on the monthly chart, when you're marking these up, you want to use nice whole numbers. So right now, this is right around what, the $1.69. You can even do probably $1.70, but I'm gonna do $1.69. So from this low right here, I'm going to basically add 10 cents, which is going to put me at $1.79. And when I add this next line, I want it to be okay. So on this one, I'm going to do a 2,000 pip range, because it moves a heavy amount on average. So from $1.69, I'm going to $1.89 on my next line. And when I put my lines here, what I'm looking for is how price action reacted to this certain level to validate it. Okay. As you can see, right around this price, here's a bounce, support. It broke through it. Here's a retest, and it bounced up off of it. Here's another. Yeah. Here's a breakthrough of it. Here's a retest. Here's another retest, and here's a breakthrough of it. So that's my first zone. I'm going to do another 2,000 pips. So that's going to put me at what? 210? I mean, 209? Let's see. Again, you want to validate that with price action. So here's a support bounce, breakthrough, couple of retests, retest, 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 breakthrough. We're going to do one more. This is going to be at 29. I should have bought that. To go even a step further, because I want to include this high up here as well, I'm just going to take this up to 49. And then again, I'm going to validate that with price. All right. So now what you have is some nice key levels or some nice price levels where you're going to begin to look for price action, like your candle reversal patterns and things like that when you're going to enter a trade, okay? But before you even get to that, you're going to go a step further though. So now what you're going to do is cut these zones in half. And I'm just going to put this at 39. So you're just basically cutting it in half, 50-50, okay? And again, you want to look for price to kind of test that zone or that line. And you're going to do that for every zone. Oh my God. All right. So now that I'm done with marking up my key levels, okay, I'm dropping down from the monthly now all the way to the daily chart. On this chart again, what you're going to mark up is some more recent key levels on the daily level though. So this is when you begin to look for like price action, for like your pullbacks, your candle reversal patterns and things like that. Let's see. So starting with from this low now all the way to this high, what I'm looking for is the same thing. If there's a line already there, I'm not going to put another line. I'm just going to let it be. Okay. Let's see. Let's zoom out real quick. And what I'm looking for, and sometimes if you can't really see the levels, you can switch to a line chart. And what you're looking for, it's for like tests. Like for instance, right here. I'm not going to put a line right there, but I could. There's no hiccup or anything. There's no congestion over here or consolidation over here that would say, hey, there might be a level right here. So my next level is just going to be the weekly. Let's see. Breakthrough structure. Came through. Well, actually, the reason why I put this line right here is because as you see right here, this gap, if that was a candle bar, this candle or these next candles, this was probably the weekend. Price would have been close below this blue line. As you can see, that line was tested and it was validated a couple times before rejected. Now if we go over here, that same area broke through right here, came down to support, broke through, came down and broke through it again, and now it's testing it as a resistance. So on GBP NZD, we're ultimately looking to short. This is where you look to gather like the main trend that you're going to be trading with for maybe like the day or even the week, okay? Now this is a swing trading method, and of course I'll break it down for you on the lower time frame so that way you can understand how to use it intraday as well. But you're just going to do the same things, okay? Let's see. So now that I'm thinking that we're going to be short, what I usually do is I'll go down to the 4-hour from the daily. me see. Well, actually, let me mark up my trend real quick. Dang, that is an ugly break. Alright. Excuse me. Now what I'm marking up right here on the 4 hour is a counter trend line. So I'm looking for a counter trend line break. Okay? And when it breaks, what I'm actually looking for is for it to come back down into this zone right here. Which would be in line with your daily trend line. Okay? Now that doesn't seem like it's a big move, but that's 300 something pips. Okay? Now that could happen in a matter of a few hours, a day or two. It just depends on the way the market moves. All right. Now for my entry on my short, what I'm going to do is, since this is the inside return against this trend right here, I fib from the high to the low. And I'm looking for price to typically fail. I'm going to highlight it for you. Yes. Yes, what's going on? Oh, yeah, hold on. Let's see. Hold on, let me see. Who is it? Yo, Dwayne. Yo, Dwayne. Yo, Dwayne. Is he here? Hold on. Yeah, I know. Oh, there he is. Yeah, he can. There we go. There we go. All right, hold on. All right. So what we're looking for now is, since we're looking to short, to follow this impulse down to short, we're looking for an opportunity to short with the market. I know you all see this retracement up, but it's only going to retrace so far within this impulse. Okay. As I was saying earlier, typically my retracement zones or my retracement or my pending orders go in between this zone right here. Well, halfway in between the 618 and the 786. All right, and if you look at that, that's actually with structure. So when price actually hit this level, it actually did a nice strong impulse down. So what we're actually looking for is for price to test this structure or test this structure and fail. Test the bottom of this structure or the bottom of this structure and fail. Basically, anywhere from where it is now all the way up into up here, we're looking for it to fail, basically, okay? And we're looking for a one-to-one move, which would create a lightning bolt pattern. All right. What I did was I just took a trend line and I just measured from this high to this low and put it up to where I believe, hell, it might fail. Let's just do it off the 6. Well, let's do it off the 5. So what I'm expecting is price to come up here, maybe do another push up and start to fail, which would be right below this structure and in line with this structure, okay? And once I see that, I'm going to go to the 1 hour chart, or I'll be on the 1 hour chart. Let's see, hold on. This is on the 4 hour. Yeah, this is on the 4 hour chart where I'm on right now. Okay. Now, notice though, price is at a nice daily level with this structure. So if price fails right here today, then you know that's perfectly fine. Today would be our entry day. You know what I mean? And you can still catch at least 300 pips. So let's see. And my take profits, guys, are these two fibs right here. Really, that's the 1217 and the 1618. If I shrink my chart, here's the 1618 up here, and then the 272. Like I said, I'm typing all this up for you guys, so that way you guys can download this to whatever you want to do with it, print it out, hang it up, and just basically follow it. So it'll be up by tonight. Let's see. All right, here's a little bit. Ooh. All right, so let's see. What I like to look at on the 1 hour chart is the trading day. All right, so from this vertical line to this vertical line, that was the trading day of, what's today? What's today? Wednesday? So that was the trading day of Tuesday. This was Tuesday 5 p.m. to Wednesday 5 p.m. So that's the 24-hour candles. 24 candles is right there. So what we're seeing right now is you had the low was set, it was tested, came up, and it's bouncing and it's finding rejection at the daily level, right? Now, if we fib from this high to this low, and this is how strong fibs are, guys. Like once you all learn this, it's amazing. It's hitting right off the 618 fib, which I expect it to maybe for London come up here and test it, depending how far it drops. Come up here and test it, maybe grab some more pending orders and things like that, and then drop some more. So I wouldn't get in just yet, or you could get in, like I said. Even if so, you would only experience just a little bit of drawdown. Your stop loss goes up here. Okay, with previous structure, if you're taking a trade from, you know, the 382, the 50, or the 618, then your stop loss isn't going to be all the way up here with the 1.1. No, that's only if you're taking a trade from halfway in between the 618 and the 886. This 1.1 is like a stop loss level. All right, so with this trade, let's say if we entered right here, my stop loss is going to be up here with the 886. And notice though, it's just above previous structure. So what that means is price does get up here and close, then more than likely it's going to keep going. Now it can pin up there, it can wick up there and do all kind of things, which I doubt it by just looking at this chart. Then you'll still be fine. And again, this is a swing trading method, so these trades take a while to play out, okay? Because you're gathering actually your trend from the daily. You're finding that the pullback or the trend on the 4-hour. You're trying to decide if it goes against what is on the daily or is it in line with what's on the daily. If it's in line with what's on the daily, you're not going to take that trade. You're going to wait for the pullback, okay? Because what's going to happen is if you catch this at the top of the pullback, then your first TP is going to be this low down here, and you end up catching hella pips. Like you can catch all this. Like I said, this is 300 something pips. That's a totally different view from more like on the 4-hour. Let's see. Dang, I might take that short myself. Y'all got any questions so far?
So when you trade the short, you swing the fin from the high to the lowest low,
right? Right. So you're going to find your impulse or your trend, which is that right there. And you just drag from high to low on a downswing and from low to high on an upswing. And what I'm going to show you guys actually what these fibs actually do. So let's say this part of the chart wasn't there just yet, right? And this was all we're seeing. Okay, since this is the impulse, you're automatically thinking that it, go long. Since this is just a retracement, just notice the down movements. They're not as strong as this, so they're limited. Okay, notice all the wicks inside of this. They're limited. Okay, so what I would do, since I'm thinking buy, I would fib from this low to this high, scoot it over, and like I said, guys, my entry is in between the 618 and the 886, with my stop here at the 1.1 below structure. Alright, now what you do is you can place a pending order since you're automatically thinking it's going to buy. Alright, just set your pending orders, set your stop loss, set your take profits. Price typically will activate it. If I'm halfway through it, I'm right here on this daily level again, right? That's confluence. What I'm showing you guys is a list of confluence to take your trades based off. This is a daily level at the top of this previous structure that is finding support on. Okay? So history repeats itself on these charts. Since it took off at this spot before, and this is in a retracement, look what happens again. And look, where's my take profit? It hits right there at my take profit. Now that took 2 days to play out. Okay. How many pips was that? Let's take you from right here up here. That's 350 pips. This is just a swing trade method. Like I said, you can use this on an intraday method from the 4-hour, the 1-hour, and the 15-minute chart as well. Even with this method, I can still go all the way down to like the 15-minute and the 5-minute chart and get like wick entries and things like that. But I'm not going to show you all that right now. Like this is just the basics where I'm going to type out for y'all tonight, for y'all to follow and take good trades basically. And this is okay. Along with that, if you have a nice trading plan, which basically tells you what lot size to place on a trade and things like that, follow it. This is the compound plan that I'm going to be working on. So basically how this works is, you start with your balance. Let's see. Typically people start with, $300 to $400, $300 to $500. I'll put $300 on the low side. Your daily growth is how much you want to compound per day. Starting out, I recommend, 10%, because it's not too risky, but it's not, too conservative where you don't see any progress too quick, okay? And what this is, guys, is you catch 30 pips at these lot size for 60 trades, and eventually you compound your account to a few thousand. And this is starting with $300. So if you successfully catch 30 pips on a trade 60 times in a row, compounding with this plan, that's what, around this amount is what the end result's going to be, okay? Now, of course, you're going to lose here and there. That's okay. Now, if you lose more than twice in a row, then just drop down your lot size and scalp into the correct balance for you to take this lot size again, and then just continue on. That's basically how you use the compound plan. Now, what I showed you, these moves right here, they're 300 pips, right? So let's say you caught this trend right here. You caught it from right here. Here's a move, a second opportunity to enter another trade. Basically any pullback on this trend, guys, until it hits my TP, I'm looking to buy. Okay. Now, starting out, that's going to be difficult for you to do because these consolidations, they're going to trick you out. They're going to make you go short, and think you to go short if you don't know how to use structure and things like that in Fibonacci. But that's really all it is. Any questions?
You make it sound so simple, but I think it's really what it is. But for me, still being new, I just, I don't know, like, even, I'm still looking at, you just said that, those two bars, the vertical lines were just the day,
Yes.
and everything in the middle was what the short did all day. I was like, it made me feel like I was extra new. So,
Really?
because I didn't know it. Yes, because
Yeah.
I didn't know that part.
Yeah.
But, when you go from the highest high to the lowest low, and you mark your short the same, when you just fit
Yeah.
and you said that you may even take this
Yeah.
trade.
What I,
When would you enter the trade?
That's a good question. Along with this, guys, there's a lot of timing behind the market, okay? So depending on what pair, like a Euro USD or basically any kind of pair that's not in the current time zone, like for instance, right now it's inside the Asian session. Right now, what is this? Oh, hold on. So right now it's in the Australian session. GBP, odd, an Australian dollar, and some JPYs because the Asian session is about to open too. You would be looking to get in your orders. But for simplest terms, let's say if you're trading Euro USD or GU or something like that, on these entries, I'm only looking for these entries in between the hours from 11 p.m. Eastern Standard Time to about 1:30, 2 at the latest a.m. If you're still looking at a chart waiting for a move to happen after that, you've already missed the move. Okay? Because what happens is you're trading in line with the institutions when you're trading like this. The institutions, they already have their trades in, guys. By the time London opens, okay, that's the thing. The equity houses over there open actually at 3:30. The trade session starts at actually 3. So usually around those hours or before, the move's going to happen. Let me see if I can show you. That's just for the London session. For the New York session, I'm looking in between the hours of 7 a.m. into 11 a.m. Eastern Standard Time. So let's see. Let me get the timer down on this real quick for you guys. Alright, so here you go right here. Well, actually, this move happened way before, what is this? Let me go to EU, actually. This is a chart that I marked up the other day with the team. This, actually, Alex, you remember this one? Actually, this was the other night. I had called this short before the swipe trade came out. That's crazy. But let's see. Looking at this chart right here, just right here, you've got 5 p.m. Eastern Standard Time, 6, 7, 8, 9, 10, 11. All right. So this candle right here, I'm on the chart looking. All right. Here's 12, 1. Here's 2. All right. So if you wanted to get this short in, here's 3 o'clock. It already happened basically. So like my entry, my pending orders up here, and you're getting it down here somewhere. Even though this was, it was all right. But looking at this price action right here, it's testing the bottom of the structure. So you've got this 3, 4, 5, 6, 7. Here's the beginning of New York Open. 7, 8 o'clock. It pins up there, right? That's a test to yesterday's high. That failed. You're looking for something like this. This is what you want to happen for this pin bar or this kangaroo tail, whatever you want to call it, to pull back from previous structure. All right. What's that? 8. This is 9 o'clock. Again, if I see this happen in London, I've got a pending somewhere set below this daily level. This horizontal line is a daily level. So as long as I see price closing below that, I'm still short. Okay. Not to mention, if I flip from right here to right here, this is around the 382, I believe. Yeah, which is in line with this daily level. So I'm automatically thinking short. So you can, set your pendings and you catch this move and all this right here, and then probably even some more down. All right. So like I said, this was what, 8. Here's 9 o'clock, 10, 11. Like I said, if you're not in your order, in between 7 to 11 is when I'm looking to get in my orders. This happened in between what, 8, 9 o'clock. That's what I wanted to see. I'm in my order for the remainder of the day, all the way until tomorrow, London session. Here's end of New York, London session. You see that? See how that works? Cool. Cool. Like I said,
I think I'm gonna need help. I don't know if you can do that, not right now, but to just set my chart up because when you look at it with your dark line, your dark background, I don't have that one. I don't know how to do it. I don't want to take up the time to look at it. I'm just going to do it.
oh, that's fine. So you like the darker backgrounds?
Yeah, because that's what I'm learning off of you by doing.
Oh, okay.
Speaking my eye, look for certain things.
Oh, okay. I got you. Yeah. Um, I can help you do that. Just send me an inbox or something like that, and then we'll set up a time to get together. Let's see. Anybody else got any questions? Dang, EU's gonna go short again. So on this setup right here, so like here's how I know it's gonna go short, guys. Like I said, patterns repeat themselves. Y'all see all this bullish movement is kind of limited against this major trend right here. So let me erase some of this real quick. So from that high to the low, it's automatically, look at this reversal pattern right at my 786. My pending order's in between it, so it's activated. My pending's right up here above previous structure. So if it comes up here, it's just going to wick. I can even put my pending all the way up here, depending on how much or how large of a lot size I wanted to do, depending on the move. And another thing I would do, just draw your counter trend line, and then you can go to the 15-minute chart. and wait for it to break. Now notice, guys, when anytime structure is broken, there's always a retest. So if you feel like you missed this move right here, structure was broken right here and right here. In order for it to be validated as price structure, it's got to be retested. Okay, here's a couple of retests to it. Here's a retest up here. We usually want to wait for the deepest retracement possible before getting in our orders. What's happening is a lot of new people are seeing the trend, which is fine. You know, that's good that they're seeing the trend, but they're not entering it properly. So like they'll see this down move right here. They'll see this retracement and they'll get in, which is fine. And then they'll get in again right here. But eventually one of these retracement kills them out. So if you get in right here, your stop loss is, you know, up here somewhere up here. Almost gets taken out. That's why I like to put my stop loss above previous structure. Let's see. If you got in right here, like I said, your stop loss right here, you get taken out. Let's see, and this is on the 15-minute chart. So depending on what happens at this structure point, you can get in short. Once you see a break structure, come up here and test. But that's just some different views for you. Any other questions? That's fine. No, that's fine. Yeah. Right. Okay. Well, what's your entry?
What was my entry? Was 1287.46 when I first started, and it's up to 50,000 right now, but it's been higher than that.
Okay. Okay. Well, hold on. Well, let's mark it up real quick and let's see what's going on. This one's gold's a little bit trickier to mark up because, as you see, it doesn't give you all the decimals as like a normal currency pair because it's a commodity. It moves on off a lead line. Let's see. Where am I gonna put this at? 18. I'm just, yeah. What I'm doing is I'm double clicking on the line and it brings up this box. And usually the box starts as style. If you click on coordinates, you can enter the price. Yep. Yeah. If you right click on it and go to properties, yeah, you can, but that's a long way to just double click on it. Let's see. So what I'm doing is I'm marking off what $200 ranges basically. So from 1800 down to 1600. Gold, like I said, gold because mine's naked. What's yours look like? I'm on the monthly right now. All right. So what I'm Yeah, unless it's already marked up. So the thing about these levels, once you mark them, you don't really have to change them at all until price gets into a zone that's not marked up. So that's the real cool thing about them. You can trade all year from those same levels. I'm gonna do one more. Alright, so now that I've got those monthly levels on there, what I'm looking for is to see if price was actually testing these price areas, alright, these price zones. And as we can see time and time again, somewhere throughout the history of gold, it was tested. So they stand pretty true. Now I'm just going to break these four zones in half. Let's see, hold on. Oh man. And like I said, when you're marking these charts up, always on the monthly and on the monthly chart, always use nice clean whole numbers. Let's see, 14. Damn. Dope. And again, I'm looking for a price to see how it reacted around these lines to validate them, basically. Looks pretty good. So from there, we can hop down to the daily chart, zoom out just a little bit. Let's see, I can draw my trend lines. When I draw this trend line, this will be my long-term trend line, okay? If I draw, well, actually, that's a nice channel. Yep. From this low point right here, I can draw up to right here, and this would be like a intermediate or an intraday, or not. This is on the monthly, going from the monthly to the daily. This is a very long-term chart. This would be like an intermediate. All right. So notice though, you got that price bounced off of it, but rejected off your key level, broke below this chart right here. I mean, this trend line right here, and it's closing below. So we're short. We're automatically short because it's below the weekly. It was rejected off the weekly. But always, yeah. But here's the thing. There's going to be a retest of this level right here. All right. So what we're going to be looking for, I can feel from right here to this low, and say the 786. Like I said, in between the 618 and the 786, using my entries. But notice how price action around the 382 is playing out. All right, and again, this is on the daily charts. That's a long time to play out. But so from that chart right here, from this right here, what we're going to do is just mark up some more daily levels. Let's see. Right here. If I want to do right there. Yeah, I'll do right there. Again, guys, you don't want to have so many lines on your chart that it looks cluttered or confusing. Just a few. And again, if you can't see the levels just yet from the candle bars, you can always switch to a line chart. And what we're looking for is things like this, like this, like this, like this, like this. And that's telling you a nice price area or nice price zone that you can look for to enter, okay? And that's really the only times you're ever going to enter is when price is around one of these lines, all right? Until you get familiar with like Elliott Wave and understand the cycles and things like that, but we'll go through that later down the road. That's too detailed right now for you. Let's see. I'm gonna mark up even one more. So I marked up this daily level right now at current price, and notice on my daily levels, I don't have to use whole numbers or round numbers. You can just mark those up. That's only on your daily. But what we're looking for is price. Like I said, price structure right here. Validate, validate, breakthrough, breakthrough, validate, validate. So that's another daily level. Okay. So notice though, we've got price rejection off of this daily level, and if I feel, let me zoom in again. So we've got price rejection off of this daily level, right? If I filled from this high to this low, that was around a 382, I believe. Which typically I don't really recommend as a new person or a new trader entering, because like I said, I look for the deeper retracement. If you enter right here, your take profit, I mean your stop loss is above this structure, okay, which is going to get hit if it decides to do a deeper retracement. So that's what I'm saying. That's why I like to set my pending orders in between this zone right here. If it doesn't get activated, so what? But once you become detailed in reading price action, you'll understand that all these right here is testing to this 382 right along the daily level. And notice that yesterday closed below the daily level. So, and this is on the daily chart. We can even take a detailed look on the 4 hour. Hold on, let me take my session breaks off on the 4 hour. Alright, so this is a complete different view, right? Let's see. Here's your daily level, and here's price broke through, test, then you've got a nice engulfing. Engulf this candle. So here's the retest again to this breakthrough to the bottom of this structure. So basically, if price is failing around this level right here, I'm getting in short basically. Alright. And then my take profit is going to be somewhere down here first. Let's see. Yeah, my first take profit right there, boom. Which nets you quite a few pips, I believe, or ticks. That's 1,000 right there. So you'll be straight. That help you out a little bit?
Yeah, but I'm not gonna be straight because I'm not getting it. I just don't know if I should. Like, I'm not. I knew I was gonna. I knew it should have been short. I do know that. So I know I'm learning.
Yeah, you're
But
learning.
I'm just nervous about getting in there again. Like, I don't know.
That's because you need a list of confluence. Like once you have a list of confluence and you just stick to it, like you'll notice that your consistency in winning trades is going to go up. I mean, you're not going to win like every trade. Don't get me wrong. Like people still lose, and that's when risk management comes in handy. You know what I mean? So, but price is below this daily level right here, and if it keeps closing below it, yeah, you're short.
This is the 4 hour chart. So
Yeah,
that means
we can even go
when you,
to the 1 hour if you wanted to.
it looks better on the 4 hour and it looks better on the 1 hour. When you put it on monthly, I was like, this don't look like that's what I was talking about.
Yeah, I mean, I'm only putting it on the monthly and the daily just to mark up my levels.
Okay.
Okay. So, I mean, looking at this right here, so here's a nice, like I said, here's a retest at the bottom of the daily level. This would be considered a double top. A lot of people think the double tops only happen at the very peaks of a trend, but this is still the peak of a trend. You see what I'm saying? It's like this is a double top as well. We expect it to drop. But, um, any other questions? Oh, another thing that I like to do, guys, if I'm trading any kind of like currency pair, like Euro USD, USD CAD, GBP USD, odd USD, what I like to do is check out the dollar index first. Damn, I marked this up forever ago. All right, so what I'm looking for, or what I look at, is this is just the strength of the dollar, or basically how the value of the dollar itself is it going up or down. Um, that tends to coincide with, let's say, any currency pair that's traded against the USD, basically. So let's say if the value of the dollar is going up on the dollar index, then Euro USD is going to go down. If the value is going down, then Euro USD is more than likely going to be going up. So I like to check the, like I said, I like to check the strength of the dollar and things like that. And as you can see right here, I've already marked up Elliott Wave and things like that, and it's looking to be, if it doesn't break above this structure point over here, it's going to be short. And when it comes short, what we're looking for is for it to, test the top of this structure that it broke through, which would be above this trend line, and then bounce up. So that's just a little inside secret, I guess. I don't know if many people will teach you that. Like, there's all kinds of little secrets I can teach. Is there any other questions?
Hey, well, okay, so you got this trend line right here. You draw this longer one of our spreads out. What is this for the retest?
Yeah, exactly. So as you can see, what I did was I took the highest point. Whenever I'm drawing my trend lines, I go from the highest point immediately to the second, and I drag it out. Okay, because like you said, it's a trend line. So if price is above this trend line, it's going to go up. If price is still being rejected off that trend line, it's still trending down. You see what I'm saying? So as you can see right here, if price broke through it, now it's finding support on top of it. So my next play is to let it bounce off of this structure point right here, which is the top of this, the top of this, and top of this, and maybe a nice strong retest of this right here, and then bounce back up because it will still be above this trend line. This is like an intermediate trend. This would be my longer term trend. It doesn't matter. I typically use that on like the 1 hour and the 4 hour, not on the daily, but on this one I use it on the daily for some reason. I don't know why. It's been marked up for forever. That's crazy. All right. Any other questions?
I don't have any. I just know that I really would like to get into that gold trade, but I just really don't. I'm not sure.
I know that's right. My advice would be this. Not that.
I'm gonna get back. I was in it in my real thing, but I hurried up and closed out of it, so I was like, I'm not doing it.
Yeah, I would just wait. 'Cause like I said, there's going to be a retest to somewhere in this zone. Let's see. There's always a retest. All right. So like I said, so it looks like the double top right here. If it doesn't get above this to retest up here, even if it does get up here and you see it failing up here, you're still short.
Alright.
Okay. Because even though this line is here, it's a zone. And what I mean by the zone is that's institutional order flow. And let me show it to you real quick. Now this isn't something that you're going to catch on to immediately, but it's something that's going to help you. It's another thing to add to your confluence, okay? So, well, yeah. So what I would do is on this uptrend, on this impulse move up, this last bearish candle is where the institutional order flow is that creates this move up. Okay, because like I said, smart money buys against the move. I like it to be red. I mean blue actually. Babe. There we go. So, what are you doing? Okay. So now that I've got it down to actually this candle, that daily candle, you can go down to the 4 hour and get a little bit more detailed. Alright. And then you can go down to the 1 hour and get even more detailed. Uh-oh. What's the high of that candle? 166.30. Hold on, guys. It's like that. So, all right. Now I can keep going all the way to the 15-minute chart and so forth and so forth, but what I want you to see is on this setup right here. Let's say I would have bought over here, you know, probably won a few pips and hit my TP and things like that as far as like my compound plan, but it really didn't go anywhere because of this daily level and then the 382 from this impulse down. But if you feel from this low to this high, the 786 or the 886 is going to be right here in that zone for your buy, which is another confluence. But here's what's going to happen though. Right here, uh-oh. Right there around the daily level is another zone similar to this. So this would be a minor, but looking from over here, from this point right here, this long candle, that's not a retail move. That's a institutional move. So what they did was they came up here, collected everybody's stop losses, their pending orders, their pending buys, or whatever from this move right here, or for thinking it's going to find support right here, and they killed their account and it dropped up against them. So this would be another zone. This this bearish candle right here would be another zone. And as you see in that zone, here goes another short. Here's another short. It found a lot of equity in that zone and it broke up. So what it's doing is finding another lot of equity in that zone before going low. Let me show you what I'm talking about actually. Let's see. Let's delete that because that's a minor. So as you see, you're in that zone. You're finding support below this trend line. So that's why you're looking to short. So this is the high. Actually, let me just go to the 1 hour. And I'll put those horizontal lines on for you. Ooh. Yesterday's high. This was yesterday's high that wasn't really tested just yet. So if it does come up, expect it to fail around here. Like I said, I feel from right here to the low. My entries in between this right here and this. That'd be my short. And then you take it all the way down to either the 272 or the 618. But even looking at this, from this look right here, that's the 618 that it's finding resistance at. On a different chart, it was a 382. So, I mean, look at all this structure over here. If price does get below that, it'd be amazing. It would probably keep going long, but I don't believe it will.
Okay.
Just have to see. Like I said, and this is recorded, guys. I do have this recorded, so. Y'all got any other questions?
I don't thank you for going over that.
Oh, no doubt. You're welcome. You're welcome. Let's That's funny. Well, ooh. All right. So,
Hey, Wallace, real quick,
what's going on?
mechanic issues. How is it when you chart up the lines? Like, what do you? Because I know you're moving fast because you know what you're doing.
Oh,
I see that you're clicking, like, making a line that automatically says weekly, it automatically says daily. Like, how are you doing that?
those are templates. I have those. I actually custom made it. So if you want to set something, basically you just click on the line. Um, Under templates, actually, let me. You create a line basically. Double click on it. Go to style, and then this is where you can, change the line color, the thickness of it. You can have it show the price or show a text. And then whatever you want to type it, just put it right there.
Gotcha.
Yeah, put it right there. Come down here to template, click at save as.
Gotcha.
And it's going to save as whatever you want to name it, but whatever you type in here is going to show on your chart.
Okay. Cool.
And this is on TradingView.
Right.
Any other questions? Hey, Stevenson's on IML TV tonight, guys. Here in about 50 minutes. So let's cut this call short, or cut this call right now, and then I'll do this probably. Shoot, we might hop back on here either tomorrow night or Thursday, one of the two.
All right, thanks, Wallace.
All right, no problem.
Thanks.
Oh,
Appreciate it.
like I said, I'm gonna type up.
Thank you.
You're welcome. I'm typing up the step-by-step instructions, and then I'll post them for you guys.
Cool.
All right.
Thanks.
All right, cool. Y'all have a good night.